Patrick Dunkerley, you're the lead fund manager for the US election fund of Indizes. Now the US has seen a change in government, a new president. Do you trust the incoming administration?
Well, the new administration is certainly a change, and people need to realize that we have a very strong tradition of stable government, divided government under the Constitution in the United States, with three branches of government that are co-equal. And so the new changes coming in will probably lead to bullish developments, we think. So tax cuts, deregulation, reform of the healthcare system. So we think there are some reasons for investors to be optimistic, and there's certainly a lot of pessimism right now, but we think investors are too pessimistic. They need to take a long-term focus.
So you don't fear any disruptions coming on with a new administration?
No, it's much more stable, I think, than perceived over here, and if you read the media. So people forget we have a very stable government structure, and it's still in place, and it looks about the same.
Now we've seen the US stock markets at peak levels, basically, and do you think there is room for more?
One of the bear points is the valuation of the US stock market, because it has run up. It's been in a bull market for many years now, coming out of the 2008 lows. But I think people are not understanding that corporate tax cuts are ahead of us in 2016. This is one of the platforms of our new president. So I think corporate tax cuts will happen, and so the valuation will look better once that occurs.
So Global 720, which is an advisory firm, put data on the intranet recently and compared the present situation with the years following what was to be known as the dot-com bubble. Now data is far worse today. There's more debt, individual debt, government debt. There's less growth, less earnings growth of corporations. Do you think there is a risk, or are we in treacherous waters, put it that way?
There are always risks when you invest, but if you wait until everything looks perfect, then it's probably the top of the market. So investors need to take a longer-term approach with their asset allocation. We think U.S. mid-caps, such as owned in the U.S. Oyster Selection Fund, are a good way to own strategically a long-term position in the U.S. market. And so we think a short-term oriented approach is not the way to go, but to invest for the long term. And mid-caps are the sweet spot of the U.S. market. The long-term data shows that mid-caps outperform the small caps and the large caps in the U.S. market. So U.S. Oyster Selection is very heavily weighted toward U.S. mid-caps, and that's the sweet spot of the market. And so it's good for a strategic long-term holding.
Just what sectors are you investing in?
The mid-cap sector is the most attractive for the long term. And as for economic sectors, stock selection, I think, is the way to go right now, as opposed to an aggressive sector over or underweight. So we like companies like Abiomed in the healthcare sector. Abiomed makes very innovative small pumps for heart surgery procedures, emergency heart surgery, heart failure, such treatments. They have a monopoly in the market and very high gross margins, about 84% gross margins, and no competition. And we think potential for very fast top-line growth over the next 10 years for this company. So that's it's about a $5 billion market cap company, and that's an example of a very fast-growing medical company that we're invested in that we like very much.
So you prefer small medtech over the large pharmaceuticals?
Well, it's more of a stock-by-stock analysis. So Abiomed would be a stock that we favor. So it's really individual stock selection that I think that's important right now.
So are there other companies, other shares you like?
Yes, we like Martin Marietta Materials, which owns rock quarries in a lot of the top U.S. markets in 26 states. And the quarry business is an intrinsically good business because it's difficult to get a new quarry permit. So we think they have pricing power above inflation over the long term. and good volume growth, especially if a new stimulus package is passed in the U.S. They'll get the benefit of the tax cuts and the stimulus, and it's a good business. So I think very good growth ahead of Martin Marietta Materials.